Hello, everybody. Welcome to Friday. We did not have a show today, but I thought I'd do the summary anyway. It was kind of an exciting week altogether. Market was up every day this week, actually, which has been a nice change from the kind of up and down volatility that we've had for quite a bit of time. Main catalyst, of course, was that over the weekend, last weekend, they, somewhat resolved, at least temporarily on a 90-day basis, the high tariffs on China, dropped it down to 30% for tariffs for coming into the U.S. and 10% for U.S. coming into China. Still pretty high. We have 25% on Mexico and Canada for the most part, 25% on most, steel and aluminum. There's a couple carve outs here and there, but 10% on basically everything else. And so these are, being ballyhooed is somewhat, victories and whatnot. So we'll have to see what the result really is. How does this impact things? How does it impact costs? We did get a report that on the middle of the week here from CPI, and it was down to 2.3% on the headline inflation, which was better than expected. And so, certainly haven't seen the impact of tariffs as of, last month for, the month of April. And we could have, obviously, because tariffs did start then, but I think we'll probably see more of the impact as inventories run down, more likely in the summer time as far as that goes, although they are talking about some impacts here at the end of May. Now, we're going to have an interruption because of the, lack of shipments that were happening for, basically a month. And now we have this 90-day pause, and apparently the shipping orders are going through the roof. Everybody's trying to get everything shipped out of China as fast as they can before this 90-day period is up, just in case there's some readjustment to the upside as far as that goes. So you've gone from, basically nothing to do in the ports to probably being run over a little bit like what we saw during the pandemic period too. So, we'll see how that works out. Now, the market won't worry about that too much. Again, if the tariffs are still there, we started to see shortages and what have you, and we had 145% tariff on China, the market's going to be concerned about that. But I think in this particular case, with the lowish tariffs that we have now, the market's going to look past any shortages that we have at this point in time. So I think it does okay. So we did make quite a bit of moves. We're mostly back in to the market, actually. We still have some pieces that have left out on purpose and left them in T-bills. Just want to see, where things are going and what is benefiting the most from this, because it's a change that just started on Monday, basically. What segments of the economy are most likely to be doing well, which segments of the stock market are doing well. So we're still holding off on our targets, but we have, on average across all of our clients, 63% of the stock was in stock market for the assets that we manage. And right now we're at 46%. So, we're still a little bit shy of where we were. I'm okay with that as far as that goes. Throughout the rest of this year, we're going to have to wait and see, how much do these tariffs impact things? Do they cause a recession? A lot of these companies are pulling back on the recessionary forecast because the tariffs have gotten better. Unfortunately, we do have temporary tariffs on the rest of the world besides China. They're coming up first, and then eventually, the China temporary 90-day hold will come up, and we'll have to see what happens. Hopefully, we'll just move along with where we're at, and let's see how things play out in terms of economically as far as that goes, and how that makes, for unemployment. Does that change? What's the Federal Reserve do? So the Federal Reserve, it's got a pretty good job number that came out, the last job number, and a pretty good inflation number. And Chairman Powell this week was talking about, maybe staying up where they are for longer than the market expects. I wouldn't be surprised to see that. So the other big development, of course, I think that the market's going to be paying a lot of attention to now is really this whole tax package that they're working on. What is it? How does it finally come out? The bond market's probably going to be the most concerned about this because they're using this reconciliation process. If you can't get 60 votes in the Senate, then you have to take a 10-year look and say, okay, if we're going to lose X amount of revenue for tax cuts, where are we getting that? And they have to reconcile those together. And so what are they going to cut, in order to make that work? And so, that'll be interesting to see if the market, especially the bond market, believes that those cuts are real, believes that the projected amount of loss of revenue is real, because it's going to fall in the bond market if it increases the deficit. And unfortunately, in these other reconciliation, processes in the past, it hasn't worked out as anywhere near actually where they have said for both parties. Usually, the tax cuts are more than expected. and then the savings aren't as much, and that's why we keep getting these kind of ballooning deficits, just like we did after this last reconciliation process we did in 2017. So the bond market is already kind of stretched a little bit thin. We have pretty good high deficits that we're funding through the bond market, and so anything else that might really push that, I think the bond market might have some struggle with. So we'll see how that plays out. I would think if the bond market has a lot of trouble with the particular tax bill, then the stock market will also. But I suspect they'll get it right. There are some real hardline people, especially in the House on the Republican side, that are not letting some of these things go through, with some of these, unrealistic numbers. And they're saying that exactly, actually. So I think that's good. I think we need that in this particular process. We need the market to be able to, both bond and stock market, to see this as a good thing and be able to, continue forward with this particular move. And then maybe if you get the Federal Reserve, some point, maybe June and July, but I kind of doubt it. But certainly maybe by the fall, starting to lower rates again. The market, of course, loves that too. So we could see some continuation. We're almost at 6,000 again on the S&P 500. So that's kind of a nice run. Got a ways to go to get back to the new all-time high if we get there, but we're making progress there. We were at 0.7% today, so not bad. So anyway, that's what's going on today. Looking forward to seeing what's going to be happening next week. I'll get back to a normal schedule with the daily videos, and then we'll have the show on Friday. Look forward to seeing you then. Thank you very much.